Assalamualaikum and salam sejahtera. Okay, I'm going to continue with the third session of my lecture on intangible assets. Okay, so now I would like to proceed on the internally generated intangibles. Okay, what's the meaning of internally generated intangibles? Okay, they refer to the assets, okay, that are created by an entity through its own efforts. Okay, the examples of internally generated intangibles include goodwill, brands, okay, mastheads, publishing titles, and customer lists. Okay, I'm sure you know what is meant by goodwill and brands. Okay, how about mastheads? Okay, mastheads refer to the titles of newspapers or magazines. Okay, such as the Sun, all right, the New Straits Time, the Star, okay, Time, Newsweek, okay, those are the examples of famous mastheads. Okay, and publishing titles are quite similar to mastheads. Okay, publishing titles refer to the title of books, okay, or magazines, and customer list is the list of customers of a business entity. All right. Okay, for a goodwill, all right, can a company recognize an internally generated goodwill? Okay, according to MFRS 138, okay, internally generated goodwill, okay, cannot be recognized as an intangible assets. All right. Why? Because it is not an identifiable resource controlled by the entity, and it cannot be measured reliably at cost. Okay. If you can still remember when I discussed about the recognition criteria of intangible assets, okay, that is identifiable, control, and future economic benefits. Okay, I did mention that goodwill, okay, did not meet. Goodwill does not meet the identifiable criteria. Okay, because it cannot be identified separately from the entity or from other assets of the entity. Okay, in order for the goodwill to be recognized, okay, the whole entity must be disposed of or must be sold to another entity. Okay, so when the whole entity is being disposed of, okay, then only the cost or the value of the goodwill can be determined. Okay, so for internally generated goodwill, okay, we cannot recognize it as an intangible asset. All right. Okay, what is the meaning of goodwill? Okay, goodwill is the difference between the purchase price and the fair value of the net assets of the entity acquired. Okay, this is about a business combination. All right. For example, Company A purchased Company B for RM 50 million, and the fair value of net assets of Company B is RM 40 million. So the amount of goodwill is RM 10 million. That is the difference between the purchase price of Company B 50 million and the fair value of net asset of Company B 40 million. Okay, so the amount of goodwill is RM 10 million. All right, for Company A, okay, the goodwill can be recognized as an intangible asset because the goodwill was acquired from Company B. Okay, but for Company B, okay, the goodwill cannot be recognized as intangible asset. Okay, because for Company B, the goodwill is internally generated. Okay, but for Company A, okay, the goodwill was acquired, therefore it can be recognized as an intangible asset for Company A. All right. Okay, this one is about other internally generated intangible assets. Okay, other internally generated intangible assets, okay, such as brands, mastheads, publishing titles, and customer lists cannot be recognized as intangible assets as well. Okay, so the same as the internally generated goodwill just now. Okay, why these internally generated intangibles cannot be recognized as intangible asset? Because the expenditures incurred on these intangibles cannot be distinguished from the cost of developing the business as a whole. All right. In other words, okay, the internally generated intangibles such as brands, mastheads, publishing titles, customer lists, they do not meet the identifiable criteria. Okay, they do not meet the first criteria, which is identifiable. Okay, these internally generated intangibles, okay, they are not identifiable. Okay, as the cost for these intangibles incur on day-to-day basis. Okay, and continue with year-by-year business development. Okay, they have been a part of the business development itself. All right. Okay, let's have a look at this example. Okay, I give you 1 minute to read the example. Okay, the accounting treatment. Amirul Berhad, okay, will write off RM 900,000. Okay, of the 900,000 is the cost incurred for the mastheads, internally generated mastheads, as expense in the current year's SOPO. Okay, the expenditure on the internally generated mastheads cannot be distinguished from the cost of developing the business as a whole. Alright, and how about the customer list acquired by Amma Berhad? Can we recognize it as intangible asset? Yes, okay, Amma Berhad will recognize RM 600,000 incurred for acquiring the customer list, okay, as an intangible asset on the SOPI, and recognize amortization expense of 60,000 in its SOPO. Okay, so amortization is actually the same concept as depreciation. Okay, for intangible asset, we use the term amortization instead of depreciation. Okay, so how do we get this 60,000 amount? Okay, the cost 600,000 divided by 10 years. Okay, so the amortization expense is 60,000 per annum. Alright, and then the expenditure meets the following criteria: identifiable, control, and future economic benefits.